Paul Horsnell, head of Commodities Research, Standard Chartered Bank. Paul, your thoughts? I mean, sort of again the same question coming out of the OPEC meeting yesterday. There was a lot of the expected, rollover of the cuts and so forth. But basically, stay the course. Your thoughts on the big takeaway? What the markets will end up focusing on?
Yeah, Sean, I mean, as I said, I mean, there's a lot of detail, a lot of meat in what came out of the meetings yesterday. I mean, essentially adds a lot of transparency back into the market. Remember, it's just over the past few months, a number of analysts and media saying, oh, look, it's terribly bearish because there's no roadmap. We don't know how the cuts will be unrolled. We think they're going to have a fight over the new targets. And here we are, all sorted out. Here's a roadmap. The discussion on targets has been pushed in towards the back end of next year. The issue of the baselines for UAE have been sorted out. And I think it's probably going to take the market quite a long time to really get to the bottom of quite how many moving parts there are here. Not much this was expected. The increase in output, I mean, for heaven's sake, I mean, we knew that those cuts to the year, certainly the top range of the 2.2 was going to come back onto the market at some point, because otherwise the market's going to be horribly unbalanced. It's coming back in a very gradual way. Doesn't start until we get into the end of this year, continues to Q4, continues right way through to September next year. Even that phasing in of the extra 300,000 from UAE, it's phased in. It doesn't go on the full 300,000 until the end of Q3 next year, starts in January. So overall, it's not very much supply coming on. I suspect the market will be clamoring for greater supplies before that. And again, the whole point of this is this isn't set in stone. If market circumstances change, they can go faster, they can go slower. But after all that clamour for more transparency, how are you going to sort out these issues? Here it is, complete transparency. Monthly targets for the 8 countries for every single month out. You know, that you get to a point where it's almost becoming a little bit over the top to again worry about transparency, etc. I think this is a very sort of decisive way of approaching all of those aspects which were seen as weaknesses.
I wanted to get your thoughts on. I mean, there was the surprise or surprises in this OPEC meeting yesterday was the fact that, and it emerged late last week, that they moved everything, all these agreements deep into 2025. And like Omar just said there, he's the only trader at the table here. You know, he's looking to make money today. He's not. Was it necessary? Why did we get this full view into 2025? Was it too soon? Does it matter? Your thoughts on that sort of big picture, big commitment outline pathway through the whole of 2025?
Well, I think as Omar said, that this provides the transparency. It says, look, here's the plan. I mean, if the Fed only provided no forward guidance whatsoever, markets would find that somewhat destabilizing. And I think the same case here for in terms of the oil market. It's designed to provide transparency. It's answered the question as to, okay, how and when will this the 2.2 million of cuts come back? It's answered the question on the next tier down, the April 23 cuts. They're locked through.
I mean, you keep using the word cuts, and I think it's interesting from a language point of view. I use the word in my publishing that they're going to raise production. Everybody, there's a lot of this bring back the cuts thing, which is sort of like more kind of, but ultimately what we're talking about here is raising oil production.
Well, that's semantic, Sean. I mean, this is oil.
Well, it's not really. I mean, you use the word cuts. It's sort of
now. Whether you assess that from when it was here and it was taken away, or whether you assess it from down here and bring it back on. I mean, the net effect is it's a V shape. It was being produced, then it wasn't being produced, and now it's very gradually being put back. But the point is, does anybody really believe that the oil market cannot take any more oil from OPEC Plus? I mean, is demand that bad? Are all the other commodity markets bad? Because they're all going up but very strong on the basis of very strong views on the world economy, on China. It's just oil that isn't. Oil's got a massive, great speculative short. I mean, that's why it's weakened. It's nothing to do with careful analysis of the oil market. If you look at, particularly on Brent, the short positions have been large. Algorithms are not very good at reading OPEC communiques. It's going to take them a while to work their way through. And so, you cannot judge an OPEC meeting at 10 to 8 in the London morning when all we've had is, a few media, a couple of analysts, and the algorithms not knowing what to make of it. So I think overall, I take your point on the semantics, but it's crazy to believe that there can never be, over the course of the next 18 months, scope for OPEC Plus to return some of that oil that was there but isn't there anymore. Should I put it that way rather in terms of?
Well, I suppose the other part of it is, and Omar, welcome your thoughts on this, that the caveat is always there. They can change the policy at any time in a way that's
Yeah, but Sean, what do you want? I mean, before the market was saying, "Oh, look, you're not giving us any idea of where we're going," and now they're saying, "Here we are, but there's flexibility; it can be moved." Now you're saying, "Oh, I'm worried because there isn't any flexibility," and of course it can be moved because the world moves; they will adjust it. This is a clear statement saying that as it looks at the moment, this is the plan. If things turn out very differently, and honestly, the way it will turn out differently, I think, is that they've been very, very conservative on their assumptions. I think demand is running further ahead of this to imply that the market will actually be calling for oil to come on a little bit quicker than this. The other thing, elephant in the room, as I mentioned.
Yeah, but their own forecast is pretty bullish. I mean, 2.2 million.
Careful to draw a line between what OPEC Plus as a group does and the OPEC Secretariat. The OPEC Secretariat produces very good research. It provides some baseline numbers. Ministers do not base their decisions purely on the OPEC Plus numbers. It's informative, but you can't draw direct lines from the OPEC Secretariat numbers through to OPEC Plus policy. You'll be very careful on that. And so that's what I'm saying. They're based on very conservative views of world economy in terms of demand. The other elephant in the room is US supply. It's been flat to falling for 8 months now. Don't see it improving over the next 3 months. We're going to get to a point sometime around the end of Q3 where US supply won't have grown in a year. I mean, the year on the averages are higher, but in terms of comparing months with year.
So your general sentiment is that they could be bringing back this supply sooner than the fourth quarter, that 2.2.
No. I'm saying over the 15-month period, I think there's scope for bringing back this oil faster. At the moment, I say, "Oh, look, it's extra supply." Well, yes, it is, but it's over such a long period and in market conditions where that extra supply would be justified. And in that sense, you can't really just be concerned that, yes, they're going to bring back some of those cuts without putting that in the context of, okay, why are they doing that? They're doing that because the balances they think will hold that. That's on a moderate demand view. And with a view of supply outside the DOC countries being, I suppose so, fairly muted, and in the US in particular slowing down. So I think there is room for it in the numbers. If there isn't, that's the time when you can go back to it. But trying to back out the view of the market from what they've done, it just looks to me as if that's a very cautious, very conservative, exactly what you'd expect. I mean, they will be cautious. They have been for quite a long period.
Paul, last word with you this morning. Now that we're through this gate of the OPEC Plus, and as we've clearly stated, and you have, that we have this very transparent pathway for OPEC Plus over the next 18 months, caveats that this or that might change, but ultimately the pathway is unveiled with all of those respective countries signing off on it. What is the next thing for the oil markets to be watching out for? OPEC's going to sit sort of on the sideline with its pathway. That's a reference. But then what's the next big thing that's going to give this market direction? Is it going to be the easing of Fed rate cuts? Is it going to be the war in Ukraine getting very hot over the summer? What do you think the oil markets now will start to turn to for direction?
Well, I think the main direction Omar's already mentioned. I mean, the key thing here is just it's not a wave of necessarily bullish investors coming in. It's the shorts closing out and realizing there's not a huge amount of downside to all from these levels. That's what gives us the next sort of push up and like gets back some of that loss over the course of the last month, which I think has been down to speculative funds. It has been down to the fast money. So that's the first key thing. Beyond that, your question is again back onto what Omar said in terms of that. Why would people start feeling, a little bit happier about oil? I think part of it would be that the numbers have to deliver. Demand has to come through at, roughly in line with projections. There should be an extra 1 million barrels a day of global demand in Q3 relative to Q2. Where does that find itself? Is that reflected in inventories? And again, think of simple things like in terms of changing sentiment. I go back to US supply. Everywhere I read, US supply is booming. It's the reason why OPEC's trying to keep oil off the market. There's been a huge increase in US oil this year. And then I look at the numbers and it's going down. So I think when more people are looking at the numbers and just sort of feeling, okay, this feels tighter, then you get that next leg up. But as Omar said, the first change here, I think very much it is down to the speculative short, seeing that this isn't really the best thing to be short, and some of the longs, which have gone to other commodities. I mean, why go long oil when oil's got all this problems with the speculative shorts, with the algorithms?
Cocoa has gone up a multiple of 10, I think, in the last year.
Well, I mean, again, you have to separate, what is genuine vol by people taking market position and what is down to algorithms and latency. And I suspect that an actual vol that you can trade is still challenged. I come across a lot of traders who are saying, look, to be honest, I don't understand how it's trading. And so, if you're bullish the world economy, bullish on or you've got a particular Fed view, why invest it in oil, which doesn't seem to be coming through with any sort of macro-related view? Let's go and put it in copper. Let's go and put it in zinc. And so, restoring the oil as a commodity which trades as you'd expect to is the next step. And I think that's going to happen when the shorts start pulling out and thinking enough is enough.